Losing money isn't the problem. It's the fear of losing that ruins most traders. Welcome back to Market Mindset Mondays on your YouTube channel Stock Trader School, from rookie to Rainmaker, where we discuss the non-technical aspects of trading to help you become a better, more consistent trader. This week, let's talk about the psychology of fear of loss. I have news for you. You're not actually afraid of losing money. You're afraid of screwing up, letting go, of trusting the process. His life is meaningless, so why bother trying? It's time to understand that losses are inevitable, so you might as well learn to love them. Embracing losses is key to mastering trading. Why? Because here's the truth. As you rack up more losses, it's harder and harder to stay motivated. The thrill of winning fades, and the pain of losing magnifies until you either quit or break even. When you're planning your day, decide how much you're willing to lose. Most traders don't use a checklist because they think it will slow them down or make them paranoid, but trust me, everyone has a checklist. It may not be written down, but it's still there. It comes with 3 mindset resets and a loss reflection template. Fear doesn't go away, but it can be managed like risk. Conquer it, and I'll see you next Monday. Some version of what to enter, what to exit, what to manage. So you might as well write it down. Every single successful trader uses a checklist. Top prop traders, hedge fund managers, successful retail traders, they all have one. A checklist is your best friend. It helps you follow your rules, which helps you avoid emotional decision-making. It keeps you focused on the process rather than the outcome, which helps you maintain discipline. And the more you use it, the easier it gets. You won't even notice it anymore. But if you skip one trade and stick to the checklist, the next 10 will be disastrous. Use pre-trade checklists, alarms, rule cards, and a review log to enforce habits. That way, you always know what you're getting into and can make adjustments as needed. For example, if you usually lose around 1% per trade, then plan on losing 1%. Then before you enter each trade, remind yourself, I'm okay losing 1% of my account if it follows my rules. This exercise changes the way you view risk and turns a potential catastrophe into an acceptable outcome. It's a subtle shift in perspective, but it makes all the difference. By accepting the worst-case scenario in advance, you free yourself from the paralyzing fear of loss. Instead, you can approach each trade with a sense of calm confidence, knowing exactly what to expect. This not only boosts your discipline, but also improves your overall trading performance. But once you realize that your brain works like this, you can change it. It's called loss aversion bias, and it's hardwired into our brains. The pain of losing makes us feel desperate, which leads to impulsive behavior. Even experienced pilots go through the checklist every time before takeoff. It's not about avoiding mistakes. It's about preventing catastrophic ones, and trading is no different. Your checklist can include anything from position sizing to stop-loss placement to take-profit targets. By writing it down, you commit to following it. It serves as a reminder to stay focused and avoid distractions. I recommend using a bullet journal, but any system works as long as you're consistent. Just keep it somewhere visible and update it regularly. A good checklist covers 5 main areas. Number 1. What market conditions are favorable for your strategy? Number 2. What price action patterns are you looking for? Number 3. What is your position size and risk per trade? Number 4. Where is your stop loss and take profit? And number 5. What is your plan if the trade goes against you? By addressing these points before entering a trade, you ensure that you're well prepared and ready to execute your strategy effectively. Remember, a good checklist is not just a formality. It's a critical tool for maintaining discipline and achieving long-term success in trading. We make rash decisions, we take avoidable risks, and we amplify our losses by chasing unrealistic expectations. The more you hate losing, the less likely you are to follow your rules. And the less likely you are to follow your rules, the more you will lose. But the secret to overcoming fear of loss is understanding it. And here's where I introduce you to the 2 words you've been waiting for. Prospect theory. These guys typically start out with some success, get a little dopamine rush, then lose a couple of trades, and they say, screw it, I'm done. It's called prospect theory, and according to their research, the pain of losing $100 is psychologically twice as powerful as the pleasure of finding it. In fact, to feel the same level of satisfaction from making money, you would have to double that amount. So if you can harness it, you'll have an unfair advantage over them. Here are 3 ways to use this knowledge to improve your trading. First, understand that there's no such thing as a losing trade. There's only bad risk management. Even if you lose the trade, you gain experience. Each loss gets you closer to breaking even, and if you win, you gain confidence. A losing trade is just another excuse to test your rules and refine your strategy. Remember that every single trade is profitable in some way. Don't think of losses as setbacks, think of them as learning opportunities in disguise. To feel the same pain associated with losing, they would have to cut it in half. It's counterintuitive, but that's how human brains work. And it explains why almost every single person in the world hates losing more than they like winning. Even if you win twice as many games as you lose, people will still remember the losses more vividly, which means the experience of playing the game becomes progressively worse over time. The dread of losing starts to outweigh the excitement of winning. They give up on themselves before they ever even got started. They never experienced any real success because they never put in the work. They just wanted the fruits of success without doing the things required to achieve it. Both extremes have one thing in common: an inability to handle loss. One chases gains, the other shies away from pain. And neither is willing to accept the status quo. They want something for nothing. If you were really afraid of losing money, then you wouldn't be here, would you? You would have quit trading already? But nope, here you are because deep down, you know that losing money is part of the game. The question is, how do you deal with it? How does it affect your trading? So first, let's take a look at why most traders lack discipline. Because most traders operate under 2 mindsets. The first is the end-of-the-world mentality, which says if I lose, my life will be ruined. Or the second one, which is even worse, is the nothing matters mentality. Why should I try? What's the point? First, let's analyze the end-of-the-world mentality. This guy thinks he's gonna lose everything: his house, his car, his kid's college fund, his grandma's dentures. So he goes all in on one trade, right? He puts everything at risk, throws caution to the wind, and sure enough, guess what happens? He blows his account. The guy who thought he was going broke now is actually going broke. Not only did he ruin his life, but now he ruined his ability to make money in the future. He traded from a place of fear and lost. Had he been disciplined, he may have just broken even. The other extreme is the guy who doesn't care. He doesn't care about profit, loss, because he's convinced that nothing matters anyway. Do you relate to either of these guys? If so, you need to fix your mindset. In 1979, Daniel Kahneman and Amos Tversky published a paper that changed the way we view risk, loss, and reward. And this is the exact same thing that happens in trading. But here's the good news: most traders aren't even aware of this. Second, know your worst-case scenario before you enter the trade. We call this pre-acceptance. Third, write down your checklist and follow it religiously. Now it's time to take action. Every trade is a vote of confidence in your plan, not a judgment on your worth. Keep your edge sharp and your emotions neutral. See you next week.